Good morning, everyone. Well, these markets are, I don't know, dead in the water. That's why I made this kind of pun on artificial intelligence with the theme this morning. The markets need some artificial intelligence to decide which way they're going to go. It's just been flat for, you can see the S&Ps here, but most of the day to day, other than little blips like on this day, open and close at about the same price with little movement. And we'll take a look at the VIX, but that is down low, pointing out the low volatility and the potential for it to rise up. And of course, that means risk for longs, but the market doesn't drop. It's just sitting there. In addition, we've been looking at sentiment, and I can't remember a time historically where it has just been at a neutral level for this amount of time. I mean, that is like going on close to 2 months at a neutral level. I don't remember a time where it's ever been like that. So the markets are uncertain when you see bars like that where it opens and closes at the same price day to day for so many of the days. It's uncertain. You can see the weekly charts. We've been talking about this now for almost a month, 3 to 4 weeks, that they're up at this resistance area if they fell from before. They don't fall. What are they going to do? I'm not sure, but just based technically at resistance, until they go one way or another, and they've gone sideways long enough to go higher. But what we normally look for is some type of range expansion, attempt to go lower. I mean, that's a high probability pattern where prices, dip down, gap down, and then recover, and a little washout or shakeout, and then maybe they go higher. But right now, we're sitting here, neutral as sentiment is, breadth is deteriorating, but it does that when markets are going nowhere, because under the hood, there are stocks that are getting beat up or just sitting there going sideways. Markets always mask what's going on individual stocks. And so as things begin to correct, different stocks are getting hit, earnings. And if you look at the artificial intelligence chart, that's gapping down today, the AI. So interesting how that got ahead of itself and coming down quite a bit so quickly. So it's a market for stock pickers, not a market to trade the markets. There are day-to-days with the volatility, things whip back and forth and create opportunities. But if you're kind of just a focus on trading the futures day to day, and markets are doing something like this, it certainly makes it more difficult. And I've been through that before over the years. And so, focusing on one market or one instrument is quite limiting. And while it's great for a while, you run into periods like this where if you can't switch up and trade other things, it's a very difficult environment. So that's the same thing whether you're trading currencies, Forex, whatever. You got to be able to switch up to different things. So market's holding here until we get a break one way or another. And with all these earning reports, tech earnings reports coming out, I suspect we're going to get some kind of movement this week, but we'll see how it goes. Well, let's go through our factory work. And where are they? They're basically unchanged. They had dipped down and back up. You see all of these, and this is a representation, this picture of stay out of the way, sit on your hands. When you've got pivot lows and pivot highs so close to each other, chopping back and forth, one of the things that we say is the spring is getting wound. What does that mean? It means that things are getting so tight, the forces of supply and demand, buyers and sellers are just at a standstill, and something's got to give. And until we see either an attempt to go lower and it springs back up, some kind of washout, things just not going to move very much. All right, so unchanged, Ranges, it's an average true range over the about a 3 to 4 5 days are contracting considerably. At one point they were around 80 points. Now they're under 30 points. SPX, things are getting tighter. And Jake is telling me, as he always helps in the morning, I don't think I want to trade even zero DTE unless I see an initial movement, because things are unchanged here. And so, as I move this to where that average range is like that, and things are getting tighter and tighter. And so do I want to do something where this could hit the high point or the low point? On any day here. Now, 41.60. I mean, that is just too tight. That is within striking distance. What is 41.60? 85 by 90. And down below, 40.85. And it would have to dip as premium. You could do 90 or so. I just don't see the reward to risk being there. So it doesn't make sense to me to do SPX because things are being unchanged here. Those strikes are easily could be hit. So unless they dip down to that level and I can get away from it, I'm just not interested in doing it early on. Alex is sharing me the euro is trying to break out. Maybe, I haven't looked at it, but the dollar is hanging here. It's getting rejected here this morning, but overall things are just slopping around. It's just an inside day here. It could dip down here before it goes, and I think that would help the markets, but I think it's going to be more about earnings than necessarily these intermarket relationships right now. And, there's lots of tech earnings coming out this week. And so this has already moved up from the low point up to resistance, just like, the dollar. So for day trades, patterns like this, sure. But for swing trades, doesn't really excite me after things have moved up this far. All right. Volatility index, down at a low point, as you can see. It could stay down here. It could dip a little lower. Just trending down. So with it being this low, it's just not, so it's a risk for longs, which so far things aren't moving, but that's what it is. Again, tech earnings coming, just flatlining here. It's near resistance. So here was the wide range bar. What I'm talking about, some kind of dip down and a range expansion bar. And here was the little sideways action, but it was close to resistance. Nevertheless, it was a bar that could have resulted in a move up, and it got rejected and still just going nowhere. Move that out a little bit. So compressing the data, this kind of little consolidation at that area, it's positive. It isn't going down, but it isn't going up. So we wait. And I think the earnings are what are going to spark things one way or another. As we look at other markets, just flatlining. Now, that had a nasty dip, right? The small caps, some more speculative, nasty dip. And then the weekend letter, I pointed out so many on weekly charts, head and shoulders patterns. And one of my comments was either things are going to melt down or melt up when so many indices and sectors are forming similar patterns and things are getting tight as they are. Of course, it means one way or another to me that either everything is going to dip or these patterns are going to fail. Like what's going to spark it? Is it going to be earnings? I suppose that's one thing. And of course, these economic reports, you can kind of see the pattern here on these futures. But as you start going through all of these different sectors, you start seeing the same thing where there are distribution patterns. And I've seen them fail, those distribution patterns in the past. And when they do, it's usually an explosive move. But so far, no failure, same thing one way or another. Which way is it going to go? So we're just waiting. We're waiting and looking at different markets that might give us a heads up. So we look at interest rates, and this is supportive that the Fed is going to raise interest rates again. This dipped over, 5%, pull in a little bit, but it's trending up from this point where, maybe they're going to back off. Well, now the market says, no, they're not going to back off. The 10-year is down here, and, it hit the prior highs and near the 50, pulling back a little bit. You see it's down here, this morning a bit, but overall, it could go either way. So we wait. It's down here at support. And after that reversal, well, I'm looking for this to go up, but we're waiting. You're saying, do you guys see an earnings trading pattern on WHR? Because I don't. Just want to see if I'm looking at the chart. Whirlpool, WHR, which I haven't looked at that. I think it's Whirlpool. I haven't looked at it in a long time. And it takes a little while for this to pull in the historical data. If I haven't looked at it before, I can look at it in these other platforms. It's just trending up. And it's not going to, there we go. You see, it's just trending off of the low here. It came down to support, and earnings are going to be reported. If they haven't been reported already, I guess they're after the close because it's today. So I wouldn't do anything unless you see there's enough premium, DC. And Dan has had high success with these where there's been enough premium and, selling that premium the day of the earnings report. So you'd have to see if there's premium, and as far as trading the underlying, that's a coin flip. But this thing doesn't move all that much. All right. You always look at other markets for clues. Transport's acting reasonably well after this dip down to support, but it's at, like many things that dipped, at minor resistance, but not pulling back, not doing anything. No matter where I look, it's either individual stocks, the market is doing nothing, and intraday things have been had this tendency to move pretty rapidly one way and flipping in the other direction. So, you got to be on your game or you're going to get hurt. Silver holding up here, with the dollar down at support. This has been correcting a bit, not a big deal yet. You can see it's extended, but so far holding up like everything else. Gold similarly had the breakout failure as the dollar, as we looked at, came down to support. Oil is coming into this gap fill in the 50 MA. It'll be interesting to see if this flips back up again at this demand area. You see how it pulled back from the 200 and the top of the trading range, but that's a shakeout. So shakeout patterns are what I was referring to, either a range expansion bar, as far as longs go, a range expansion bar went down, or a shakeout where things break down and back up again. And this is supportive of this can go higher, but now we need to see it begin to lift off, and we'll see how this holds up. And a lot of the ETFs, don't know if I can pick the right one here for oil. Just click through them. And you can see, well, here's the price of oil, USO, and all of these head and shoulder patterns in the oil ETF. And so we'll see in which way these are going, but oil stocks look like they could roll over. And you can here's steel. Here is metals and mining. And so I'm just showing you all of these head and shoulders patterns. Airlines, and you got the dollar down here, but it's got to lift off. But it's not doing that. Nothing is moving. Something's got to give. Bitcoin had that run, and that's been pulling back since there. And this has got somewhat of a correlation with the broader markets. So while this is pulled back, the markets have just been flat. But so one of the things that I want to see what happens here is, so Bitcoin comes down here, there should be buyers. And if this begins to push up, well, maybe that puts some legs under the market to move up. The more uncertainty there is, the more things that we have a tendency to look at looking for clues, because the patterns don't support prices moving in either direction just yet. The Dow, just consolidating up at that resistance area. And so far, nothing really moving here today. There's some gaps, individual stocks, as I said, individual stocks are moving, but the markets are just doing nothing for now. And just going to the futures, you can just see now they've come down to the bottom of the wide range bar. And that's not a good sign, because the retracement is deep and not supposed to come down there. It's supposed to do what it was doing here after the wide range bar and then push higher. So I've said enough uncertainty. We're waiting. And as these economic reports come out this week, there's lots of them. I think there's like 14 Dow stocks and lots of other tech stocks. So I think something's got to give here one way or another this week, and we'll see what happens. Yours, Dan.
Good morning. So yeah, even though the markets are in a coma here, we have a great watch list, long and short. So that's good for us. I read in Barron's that they were saying it's like if we continue through the end of the month, this is like the calmest month in years of volatility. And I was reading that some of the reason of the VIX being low also had to do with all these zero DTE products and the hedging. And I also read in Barron's that they're coming out with a zero DTE VIX for us to trade. So I typed it right here. I don't know if this is a symbol for TradeStation, but it's VIX 1D. So I'll type that into my Thinkorswim here when the market opens. Jose on YouTube asking about a couple things here. Yeah, I get a monster watch list today. SATX. Yeah, it's coming out of, if you like playing with, bottoming garbage stocks, but it came out of a coma. So it looks okay. iHeart. I like that one better, just because it's $4 instead of under $1, and there's better price action here. So you can watch that. GTLS and ROIV. Yeah, they're both fine, Jose, all those. Yeah, this has a bunch of tails at resistance. Next target could go to 975. I'll break this other one down, GTLS. All right, so let's talk about this thing. For you option traders, this was a bullish daily, weekly, monthly reported earnings pre-market. Last Friday, we bought the $20 calls as a speculative directional trade because they were so cheap, in my opinion. We only paid 40 cents for a whole month of days to expiration. So this one's paying off handsomely, provided it opens like this. Right now, we have $1.75 of intrinsic value because we have the right to buy the stock at $20. But the reason I'm not shorting it pre-market is because if you did short it, then you could, you'd be giving up your extrinsic value. So what I'll watch it at the open, of course, but I'm thinking there's going to be at least 35 cents of extrinsic value. And so if you add those two numbers together, we should be able to try to sell it at around $2.10. Expedia here, I like a little buy setup from a bottoming pattern, gapping up, had a positive Barron's mention. So I like this for a put spread, number one. Number two, possibly 30-minute high. I read in the journal this morning that Moody's downgraded a dozen regional banks. And, Greg looked at the broader markets, of course. But the fact that the markets are holding up this well in light of this regional bank, this kind of collapse is bullish. Things that act bullish on bearish news is bullish. Now that's the broader markets are holding bullish other than IWM. This KRE, as a technician, inability to bounce suggests lower prices and that there's more cockroaches or problems under the hood. And that's why this IWM is so weak. They have so many regional banks. But this would be a red bar ignored breakout if it were to go over last week's high. As of right now, it's like all four indexes are just dead in the water. If spiders take out Friday's high, though, then I like this as a 0 DTE. But the drill. If it takes out the high, that's strength, and then there's not going to be much premium down there. That's why Greg likes fading these. So for a put spread, we would actually prefer taking out Friday's low, accelerating lower, maybe down to the 20 MA, then intraday reversal, putting on a put spread. All right. Coke also had earnings. This gapping up 65.20. Things that run this much into earnings and then gapping up, even though it came out of a monster base, I just have a short bias on for day trading and shorting call spreads. So that's an idea. This little INAB looked like it was going to zero. Now it's popping up to 240. Something obviously is going on with that, but the gap's too big. Greg mentioned this AI stock. We've been watching it for a long time. We nailed the entry back here. We had a nice little core trade. And then Thursday's bar is what we call the death nail or the tail. The top of the bar was a breakout, then range expansion, closing breakdown, big topping pattern with a void. That was definitely shortable on Friday under Thursday's low. This looks like a big mess, but it's also a big pre-market gap. I don't like the way that trades. Something's up with this thing. I don't think it's earnings. RHC, well, it's not earnings. Oh, look at this one, looks fantastic. FRHC. I'm going to put this in a window. FRHC. This is a beautiful, beautiful bottom, multi-week bottoming action in an uptrend. Look, there's a pro gap, hold in, new low failure, retest, this range expansion, bull 1, 2, 3, closing breakout, bullish weekly. Had I seen that over the weekend, I would have put this in as a long buy over Friday's high. But now it's gapping up a little bit, so we have to watch a pullback. Getty, I think, is getting a purchase offer. Somebody's after them. I heard Kramer on there touting it, saying, "Oh, it's a fantastic deal. It's worth more than $10." So Kramer likes it. UAL had a breakdown failure. Nice support. I'm watching this as a put spread idea. Cat, I was going to give as a put spread, but has earnings this week. This Jatila's bullish price action after 100% retracement with a void. That looks good. This is Sam, I think, on your list. Now here's a buy setup after an igniting breakout. That looks good. I'm going to set an alarm on this. I'm just going to set it, I don't know, 2182, 2180, and hope it doesn't go off at the open. But that looks great for put spreading and directional. Flare, a sloppy buy setup, bottoming pattern, but it has room. If it does get moving, it has some room on the monthly, but I just don't like stocks that have those overlapping bars like that. And this is a continuation breakdown candidate. This was what I call a minor little bull sandwich breakdown. But that still looks lower. My AMD alarm just went off. This is a directional and call spread idea. I got Expedia in the other chart. So I'm going to put that here. AMD looks good. XP, little bull flag. 1, 2, 3 on the weekly. Now Vive put spread idea under Thursday's low. I like the breakout daily, weekly, and it's a retest on the monthly. Aries at resistance. I'd prefer it to go sideways another day or two, but very strong. Look at the depth into this resistance, higher low. This is a great chart to discuss retracements, which is going to be this coming Wednesday, MT Live. That retracements tell you just so much about the strength of something and what your bias should be on the subsequent retracements. All right, shop, bullish, daily, weekly, monthly. I thought I put this in the weekend letter, but that was spot. All right, I like shop. I'm going to set an alarm at 49. This looks great. And the fact that the markets are going nowhere is good for at least for me on Mondays, because I get overwhelmed with all the alarms going off, but we're going to be in no rush to get into anything. So I don't feel the pressure. WTW alarm just went off. That would be a beautiful 1, 2, 3 if it closes like this. All right, BWA alarm. That's a 1, 2, 3 with a gap reversal. RCM alarm. That's going. So, BWA. I'll get to these posts later. I'm more interested in. All right, so AMD is a go. It filled also. On the call spread, let's look at our PHG. I did not hear a bell go off, so I did not get filled. No, because of the option market's not open yet, is why. Yeah, there's still 40, 50 closing price. Yeah, Amazon I have as a put spread idea into earnings, but it's way under this, it's under this low. I did it really far away. Goose, my alarm didn't go off. Oh yeah, it did. Yeah. Goose was a beautiful bottoming pattern. I love bottoming patterns like that where you get all the converging MAs. Yeah, so Goose triggered. I'll get to this, spreadsheet in a few minutes when things slow down. Shop alarm. Looks great. TTMI alarm. I didn't make this one official just because these prior lows, but that's a closing breakdown. GTN short, just idea.